Deven, but your view on the stock, Infosys, of course, it's corrected quite a bit from its highs, but has been protecting its recent lows as well.
Anuj, I think as I made a point earlier, I think this particular company looks, I think, pretty interesting because I think the visibility of revenue and the profit is there in the business. And because of that, I think if you have 5 years, 7 years worth of, I think, contracts which are getting executed, and if you are successfully winning some of the contracts, I think, every quarterly basis, that means, I think, one should not be having any doubt in mind about, I think, the ability of the company to execute those particular projects going forward. And that creates a good amount of visibility. Given that kind of a situation and given the cash in the balance sheet the company is having, I would be very surprised that I think they enter into a buyback kind of an arrangement. Also to, I think, protect the stock price from going down and send the positive signal to investors. So I would remain reasonably more confident on the fundamental side of the prospects of the business per se, as far as I think a company like Infosys and TCS is concerned.
Okay, all right. Some of these OMCs are actually bucking the trend now as we speak. BPCL has moved to the high point of the day. Keep an eye on that one. IOC as well is moving higher. Cooling off of crude oil prices, those inventory losses could move out. So I guess that's the hope out there. Both those two stocks. Pull up IOC as well. He's doing pretty well. Well, Deven, final question from me before we let you go. The ferrous and non-ferrous space. On one hand, everyone's talking about supplies shutting down. But China is the problem. China's consuming less. If that happens, they'll be fueling the global markets with higher amount of what they produce. And that's what could put pressure on pricing. So demand seems to be the focus as of now, which is weak, not the supply constraints. How would you approach some of these stocks? Both Hindalco and Tata Steel are the top losers.
So, Nigel, I think my understanding says that I think domestic market per se, the prices are also comparatively softer compared to the international market price. So should the situation of, I think, softening of prices happens because of, I think, the China factor in the global market, I think there might be some correction in the price, but I think on the other side, the demand scenario is expected to remain extremely strong. Rest of the places in the world, I think the situation is, I think the demand scenario is getting affected, but out here in India, the demand for the domestic producer, I think, is likely to remain very strong because of the higher amount of infrastructure spend and the industry, I think, to the capex mode. All in all put together, my reading says that I think overall, I think they will be able to meet the pricing pressure at the same time because of, I think, the input cost now not rising alarmingly as it used to be, I think, in few quarters back. So from that point of view, I would think that I think even though they may not earn the supernatural profit margins, but they would be in a much better position to, I think, pass on the cost and I think enjoy the delta as far as I think the prices are concerned. So not too negative, but yes, I think if the corrective prices comes in, then only I think the buying should take place into the metal commodity stocks.
Okay, Deven, we will let you go on that note today. Thanks a lot for joining us. Always good talking to you.